Welcome back to the channel, everybody. I am Mick Alphaneme. So we're going to begin here with this article on the cryptobasic.com, and it's titled, "Is XRP primed for a 30,000% surge?" Now, I know that sounds like quite a bit, but they have a little bit of information here that shows that it's all possible and it has happened before. Let's read this little tidbit and see what they're talking about here. I'm all for it. If it can do that, I'm definitely all for it. It says XRP may be primed for an explosive rally that could skyrocket its price by 300% to 30,000% in the near future. XRP's potential to hit this threshold was recently highlighted by XRP, a prominent crypto analyst, using a key indicator that has proved reliable over the years. Don't worry, we're going to get to the point because I believe they give you some proof here of what has occurred before, and that's what they're going by, okay? So it says here, in his latest analysis, XRP called attention to a phenomenon observed with the 100 moving average, the 200 moving average, and the 300 moving average in the 2-day time frame. It says, notably, it was observed that whenever the 100 MA breaks above the 200 MA and subsequently crosses above the 300 MA, XRP has always staged a massive rally that has increased its price by unprecedented scales. XRP dubbed this phenomenon kaboom. Wait a minute. Wait a minute, XRP. I use boom a lot. Hey, you've been watching a little bit. No, I'm just kidding. Phenomenon kaboom. I understand why. Holy smokes. Yeah. Seeking to reference explosive growth. The phenomenon. Okay, here we go. So it's happened before. The phenomenon occurred in late 2017 and ultimately resulted in a 47,000% surge in XRP's value. That's not it. That's not all. It says the rally spilled into the first few months of 2018, leading to XRP's all-time high on January the 4th, 2018. This remains the biggest rally from XRP to date. So this next section here is titled, XRP could soon observe the cross. XRP has only witnessed 2 such massive surges since its inception, and the cross immediately preceded both surges. XRP pointed out that the cross is about to happen again, and that's what he's really trying to allude to. We'll see what happens. We'll see. We'll keep our eye on things. It says here, the asset's price could skyrocket by 300%, 3,000%, or 30,000% without stating a fixed rate. All right, we're going to close out with this little bit here, and then if you want to, this article is on the cryptobasic.com. Of course, I'm leaving out a whole lot here. So if you want to read the rest, make sure you give them some traffic over at the cryptobasic.com. It was on their front page, okay? But let's end out with this a little bit here. It says, instead, he allowed his audience to predict what they felt could be the most reasonable rate. Some proponents suggested a 30,000% increase if Ripple versus SEC lawsuit ends with a favorable ruling for XRP. Listen, I will share the sentiment that when the case ends, if it ends positively, sky's the limit. But for me, it's all about catalysts. That's how I feel. It's all about catalysts. For me, it's all about the banks, the big businesses. That's what I'm here for. I'm not here for the retail volatility, those little price actions. I just have to be honest. I'm not. So that's what I'm waiting on. Solid catalyst. I need to know. Announce this bank, announce that bank. Then we start having a reason why it's going up. Like that means something. Now I'm looking at, once those things start to occur, massive banks start coming online. Boom, boom, boom. They're using XRP on-demand liquidity. Payment channels. Remember, in the payment channels, which is one of their absolute best offerings, you have to use XRP. Have to. Look it up for yourself. Don't just take my word for it. That's what I'm looking for. Those types of announcements. So, but you know, sure, if we get some of those when the case ends, yes, sky's the limit. That's how I feel about that. So it says here, it bears mentioning that XRP's dramatic 760% surge in April 2021 occurred despite the legal pressure from the SEC lawsuit. So once again, what do people believe is going to happen when the lawsuit is over? It's 760% surge during the lawsuit. It's quite telling, isn't it? All right, so now let's move on here. By the way, big shout out to Manchester. We had a subscriber the other day, showed me a lot of love from Manchester. I greatly appreciate that. I appreciate every single one of you from wherever you come from who have shown me love in any type of way, man. Just remember, Alpha Neem loves you back. I appreciate every single one of you greatly, more than you could ever know. So now, this article, we got a lot of good articles today. This article here is from investing.com and it's titled, XRP will rise to $3, but it will take a while, says this trader. Okay, well, I can respect that if that's your opinion. Let's see what you're talking about here. It says a crypto trader name of Harry shared his Elliott wave analysis for Ripple XRP this morning, alongside a warning that traders should take note of the current situation on the remittance tokens charts. In his tweet, so it says in his tweet, the trader added that swing traders might potentially be unable to afford XRP as its price will rise in the coming months. I was saying the same thing the other day. There is a huge swath of people that don't like to buy anything over like $1, maybe $1.50, the max that they go. There's a lot of them. There's two extremes in the markets, especially the stock market, but in the crypto market as well. There's a lot of crossover. But one type of trader doesn't like to go expensive. Another type of trader, and I've encountered them by the hundreds, they don't like anything that's not expensive. They look down on anything that's not expensive. They spit on it. I mean, they talk very, very badly. They don't make it a secret, and they come into those the chat boards for the stock market, and they let you know. They let you know. And holy smokes, don't challenge them either, because they will get into your stock and play just to hurt your stock. Like, they will do that. All right. There have been a lot of wars in the stock market. All right. It's just my personal experience. I don't know. Somebody may have a different one. All right. So anyway, so there's two different extremes there. But let's continue on here. It says in his tweet, the trader added that swing. Okay. According to the trader, XRP's price seems to have completed its bearish wave 2 correction recently. He also added that XRP's price has been printing a fulcrum/double bottom pattern since June of last year in search of a confirmed wave 2 completion. Let's just scroll down this a little bit. I want to get to the $3. It says, as a result, the trader believes that XRP's price will rise to $3. Oh, I can't wait. Oh, it's going to be delicious. It says, but stated that it will take some time for XRP's price to reach the $3 mark. All right, so, this is quite understandable. I see from this individual's perspective where everything is going. So I'm not much of a charter. I do look at the charts, but not very often at all anymore. But just from time to time, I do read the articles on the charts and such. But I'm more of a catalyst person. I need to know why something is happening. There needs to be a solid reason behind it. All right, so now let's move on here to a little bit more XRP news here. So this article is on U.Today, and it's titled, XRP delisting might hurt Coinbase's fair notice defense. Crypto lawyer says why. All right, well, let's hear a little bit about it. This is XRP enthusiast and Australian-based lawyer Bill Morgan believes that the fact that Coinbase crypto exchange delisted or ceased to allow the trading of XRP might hurt his fair notice defense to a claim by the SEC. Ooh, I was going to say something, but I don't. Coinbase, I see where this is going. You better be ready. In the past week, Coinbase formally responded to a Wells notice from the SEC. A Wells notice is the way that SEC staff tells a company. Well, we know what a Wells notice is. Let's scroll down here. All right, let's get to the crux of these things. It says Morgan points out that according to Coinbase's Wells notice response, the exchange anticipates using the fair notice defense if it is ever sued. He adds that Coinbase contends it has a stronger fair notice defense than other defendants, and even footnotes Ripple's fair notice defense. All right. Well, just fight your battle. Sometimes you have to let go of the comparative mind I mean, use the evidence that is at hand, use the precedents that are at hand, but you don't need to compare right now. You need to pick up your shield and your sword and fight your enemy. Your enemy is before you. Keep focused, or you're going to pay the price. It says, while this appears to be a good thing, Morgan claims that Coinbase faces a problem because it delisted XRP in January 2021. And I understand what he's about to say. I do. Once again, Coinbase, you better be ready. Make sure your legal team is solid through and through, that they are the best of the best, aggressive. Says, which occurs shortly after the SEC versus Ripple lawsuit was filed. And that's another problematic thing about waiting so long to fight this battle, because you took certain actions then and now you're fighting it now. It's been a huge gap. They're going to use that to their advantage. I mean, listen, I'm no lawyer, but I'm just using logic. And I think my logic is sound. And I hope the best for you. I want crypto to win. I want crypto to win, but don't injure yourself along the way. You get what I'm saying? It says, this might have suggested that Coinbase had given the matter some thought and had decided to stop trading XRP. That's what I was saying. He believes that this puts Coinbase on notice that its listing process might have captured securities. I'm just going to stop right there and let's move on to another article. You know, good luck to you, Coinbase. So this article here is from U.Today also, and it's titled Ripple CTO Reveals Truth About XRP Ledger's alleged centralization. All right, so, you know, this has been a hot topic as of late. Let's just read this little tidbit. It says, Ripple CTO David Schwartz has once again defended the decentralized nature of XRP Ledger amid criticism from Justin Bonds, founder of Cyber Capital. As reported by U.Today, Bonds had claimed that XRP, as well as Binance Coin and Stellar Lumens. What? Stellar Lumens are centralized due to their permission blockchain architecture. Now that is mind-blowing to me. Stellar? I just don't understand that. Stellar Foundation does not control what's going on the Stellar blockchain. You have so many companies building on Stellar, doing better and pushing the chain actually further than the Stellar Development Foundation, like Stronghold, BPV, Velo. I mean, I just have to respectfully disagree. So anyway, that just blew my mind. It did. But let's read what Schwartz has to say. So Schwartz countered by stating that the XRPL achieves the same level of decentralization as proof of work, POW blockchains, but in a different manner. He explained that XRPL has no special authority to change rules, and transactions cannot be censored for more than a brief period of time. Additionally, XRP Ledger uses consensus to decide which transactions should be included in a block, which Schwartz believes is more decentralized than a POW system, where a single person can decide which transactions are included in the block. Actually, he makes a heck of a powerful point. Wow. I'll tell you what, when Schwartz steps forward, he definitely makes his presence felt. That is powerful. So furthermore, Schwartz emphasized that the XRPL is cheaper to operate than POW or proof of stake. Now he's just sprinkling salt in the wounds. It's cheaper to operate than POW or proof of stake systems, as there is no need to pay for the energy consumption of miners. All right, so now we're going to move on to another article here. Random. All right, let me give you a little random because I have stuff on my mind. So I got to break up the monotony a little bit. Have you ever been in the store, right? I was just in the store. You know, I've been trying to cut some weight as of late. Been working out really hard, so I need to go get some electrolytes, right? I sweat heavy, so I need to go get some electrolytes. I went to the CVS to get some electrolytes, and I'm in line and I'm paying for my stuff, you know. And I turn around. I kid you not. I turn around to exit. This lady is so close to me. I mean, like, if I had turned around and just took one step forward, we would have been hugging. What? Why Why are you standing? Now listen, I use contactless everything from a certain device, right? So there's not going to be any, you're not going to tap my pockets. You're not going to get anything. There's nothing for you to take from me, right? So I don't worry about any of that. There's nothing to see. I just press the little thing on the screen for pay and then boom, pay, and I'm out of there, right? So I'm trying to put that thought out of my mind. I'm like, but why do some people stand so close to you like that? Like, why are you? I just don't. Can anyone explain that to me? Have you ever had that happen? I mean, like, I can't even believe how I turned around. I was like, whoa, it startled me for a minute. You know, anyway, that just blew my mind. Like, why would you be that close to me? This article here, which is from thecryptobasic.com. And it's titled, Ripple Council Slams SEC. All right. Let's read this little tidbit, see what's going on here. Stuart Alderati. One thing I'll say, Stuart Alderati is always serious business. This individual does not play around. Like one of those stern uncles that doesn't play around, you know? Stuart Alderati, Ripple's general counsel, has taken a jab at the United States Securities and Exchange Commission. In a tweet yesterday, Alderati, what he's doing is when he's doing this, it's not just about taking jabs. That would be pointless. But it's about emboldening, other opponents of the SEC so that they have the courage to fight. It's to show fearlessness. It's also to show the SEC, hey, we have no fear of you. We're going to keep coming at you. We're in this fight, yes, but I'm going to continue to show you that we're not backing down. So it's a lot of posturing, but it's also to embolden, as I said. You have Coinbase going against the SEC. You have a bevy of companies that are going to have to face the SEC. So it's going to show them that someone is not afraid and they don't have to be afraid either. All right. And it sets a very, very powerful precedent, in my humble opinion. It says here, in a tweet yesterday, Alderati shared an image of someone preventing a fish from swimming freely in a pond. The general counsel at Ripple captioned the photo, quote, if the SEC ran animal control. All right, that's interesting. So it also shows that SEC would even have tried to put a collar around fish necks to control them. Wow, that's actually powerful imaging, truth be told. Says here, the tweet mocks SEC and suggests that the Securities and Exchange Commission would have prevented. Okay, so they reiterate some things here. No big deal in my humble opinion. I like to focus on potent things that are happening. But once again, this is a message that's being sent to the rest of the industry, and not just the crypto industry, but to any industry that is developing now. For instance, the AI industry. So the AI industry is going to come up. Obviously, they're going to have a great hand in the shaping of Web3 and the moving forward of distributed ledger technologies. And in Europe, they're already trying to roll out legislation for AI, right? So I'm going to go out on a limb and say that the United States will probably move in that similar direction. So, and let me tell you something. I'm trying to be careful with my words. People are using AI in a lot of different ways to better themselves at making capital. Let's just put it that way. Put it that way. So I do believe that certain ways that AI will be used in the future, it definitely can fall under scrutiny of, harsh scrutiny of regulators. This is sort of a flare for those industries to say, hey, listen, watch out for yourself. Be prepared to fight. They may come for you, but you don't need to be afraid. All right. So that's how I look at that. Now let's move on here to another article. Actually, it's a tweet. Now, I wanted to highlight this. This is some stellar related news. Now, this is Tory Samples doing a presentation for Stellar Aid Assist. Now, there's actually a video. Now, as she's talking, I'm looking at the screen on the back, and I love what I saw. When I see them talk about Stellar-based wallets, yes, you know what that means, right? If they're going to be running Stellar wallets for all these millions, possibly billions of people. Of course, that's in the future. What do you think is going to do to that price? We all know what you need to have a Stellar-based wallet. A modicum of what? What is what for transaction fees? You know, and I know. I absolutely love seeing this. And then putting it out there so that more respected eyes may want to build on Stellar. We have so many companies building on Stellar. It's unbelievable at this point. If they're all, when they all are ready to fully utilize the Stellar blockchain the way that they can, when they're unleashed, it's going to be a very fun time, in my humble opinion. But that little image there told me a lot, and I was glad that they showed it. Let's move on here, okay? So now this is from money.usnews.com, and it's titled, U.S. Bank Deposits Dip in the Latest Week. Let's read this little tidbit here. It says, deposits at commercial U.S. banks dipped in the week ended April 19th, signaling no fresh worries about bank safety of the kind that drove sharp outflows in the week immediately following the collapse of Silicon Valley Bank. Data released on Friday by the Federal Reserve showed deposits at large banks fell to $10.61 trillion from $10.74 trillion a week earlier. On a non-seasonal basis, deposits at small banks totaled $5.36 trillion, compared with $5.39 trillion. They continue to lose money, hemorrhage capital. The seasonally adjusted measure of deposits, which take into account typical outflows of deposits, including tax season, rose, suggesting the actual outflow seen at banks may not have been as large as usual. All right, so now let's move on to another article here. We'll continue to keep our eyes on the banks. They definitely been in a lot of trouble. All right. So here's a little bit more bank news. It says here, which means they're going to need the new financial system. So this is from finance.yahoo.com, and it's titled, Munger warns banks stuck with commercial property debt. All right. So let's read this little tidbit here. It says, banks are saddled with bad loans, signaling trouble ahead in the U.S. commercial property market. We've been keeping up to date with this. Berkshire Hathaway Incorporated's Charlie Munger told the Financial Times in an interview. Despite Berkshire's long history of supporting U.S. banks in times of turmoil, the company stayed on the sidelines after the collapse of Silicon Valley Bank and Signature Bank. Some of its reticence came from risks lurking in banks' large portfolios of commercial property loans. Problems are on the horizon. Quote, a lot of real estate isn't so good anymore. Unquote, the Berkshire vice chair told the Financial Times. Quote, we have a lot of troubled office buildings, a lot of troubled shopping centers, a lot of troubled other properties. There's a lot of agony out there. Keep this in mind. Quote, every bank in the country is way tighter on real estate loans today than they were 6 months ago. End of quote. All right, we're going to leave that there, okay? And let's end off here today. Hope all of you are doing well out there, okay? Let's end off here with a little bit of silver news. This is from fxempire.com. And it's titled, Silver Continues to Consolidate. Silver continues to consolidate near the $25 level as we try to figure out whether or not we are going to go higher. What? I mean, you must be talking about in the short term. I'm a long-term person. If you're talking long-term and you're looking at the utility of silver, the need for silver and all of these different components, then you look at how slow mining is increasing. There is no way in the world that, I just speak for myself, there's no way that I don't see in the long term silver exploding. Maybe it's just me. Let's read a little tidbit. It says here, The silver market has gone back and forth during the trading session on Thursday as we continue to wait and see whether or not we can find some type of momentum to go higher. The $25 level is obviously a large, round, psychologically significant figure and will attract a lot of attention in general. The market pulling back the way it has is not a huge surprise. Yeah, I agree with that. Due to the fact that we got all the way to the $26 level rather quickly and perhaps even too quickly. Well, we had certain scenarios that forced people out of their fiat and into, store of values like gold and silver and platinum, right? So, I mean, we knew all along they were going to liquidate at some point, pull that back out and go play with fiat again. Of course, that's just the way that it is. But let's continue on here. It says, it's not until we break down below the $23 level that I would be a seller of this market. And at that point, I think you still have to keep an eye on the 200-day EMA. Anything below that would open up a massive sell-off. All things being equal, the market is likely to continue to see a lot of noisy behavior. I agree with that. So I would be very cautious about putting a lot of money into the market in one shot. I also agree with that. Okay, this person knows what they're talking about here. It says, however, I do like the idea of buying dips, perhaps a little bits and pieces, and trimming the position every once in a while as we rally. If we do break above the $26 level, it's likely the market could go to the $27.50 level. Anything above there then opens up the possibility of a move to the $30 level. We're going to stop there. All right. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.